Islamic finance, can it sustain the growth it has enjoyed today?
Yes, Islamic finance has made significant progress domestically in Malaysia as well as globally. Today, Islamic finance has reached a critical mass. Islamic finance accounts for 28% of the total banking assets, 34% of financing, 33% of deposits. And in the bond market, Sukuk now accounts for 57% of our total outstanding bonds in Malaysia. Malaysia is also an international Islamic financial center. Out of $71 billion asset, Syariah-compliant asset under management, 33% of that is managed in our country. So today, Islamic finance is a competitive financial system offering a wide range of products and services to meet the various needs of the customers, be it individuals or businesses. Interestingly, for example, a majority of business customers of Islamic finance is non-Muslims. So this point highlights a critical fact that now Islamic finance has been widely accepted and no longer confined to Muslims who are looking for Sharia compliant. So what's next? From Bank Negara perspective is that the future for Islamic finance is about looking at quality growth. What do we mean by quality? Here we would like to see Islamic banking institutions, takaful operators, look at from the perspective of the value that they can create, the impact they can make through their business activities and on a sustainable basis. And this is where value-based intermediation, a key initiative that we launched last month, fits into the picture. We see VBI as a critical approach to transform Islamic finance to be more impactful and sustainable. That is the future, value-based intermediation. What do we mean by value-based intermediations? Essentially, we look at value-based as a business strategy by the financial institutions, by the Islamic financial institutions that is driven, a business strategy that is driven by the desire to create value and make impact through their activities on the real economy, on the community, on the environment. The key aspect is to look at value-based intermediation as part and parcel of the business strategy of the institutions. And this is where the banking institutions will be undertaking a sustainable business strategy rather than just focusing on short-term immediate objective.
What does that mean for the customers of the financial institutions, and not only them, also the other stakeholders involved?
What do we mean to the customers is that first is obviously through VBI, when you look at from the perspective of the value that you can offer to the customers, then essentially the banking institution, the Islamic banking institutions will be putting customers first. Let me give an example. Look at for individuals. Now, what we are seeing in Malaysia is the improving living standard, and our individuals have more and more financial assets, which we would like to be managed properly. So, from when a Islamic banking institutions adopts a VBI, it will be a paradigm shift in the way they approach and they manage their customers. Rather than push a product what a VBI financial institution will do is will look at and understand what would be the needs of the customers. In this case, what will be the financial needs of the customers. And by analyzing these, the institution would be offering advice and products that would suit the needs of the customers. So we would hope to see no longer product pushing, but rather products being offered to reflect the needs of the customers. And this is where the use of technology is critical, and also how the banks make use of the data that they have. So the point about data mining, to really understand completely about your customers and your customers' needs and what would be in the best interest of your customers. So that is one example on the individuals. Another example I would give is with respect to the SMEs, small and medium enterprises. When we look at Islamic finance, for example, a key value proposition of Islamic finance is equity financing and risk sharing. In fact, risk sharing differentiates Islamic finance from conventional finance, because conventional finance talk about risk transfer and debt accumulation. Amazing fact is that just before the global financial crisis, total debt globally was around 250% of GDP, of total GDP, global GDP. So we thought one key lesson of global financial crisis is that the fact that excessive debt could be a key risk to the financial system and to the economy. And we would think that following the global financial crisis, that debt accumulation would decline globally. But that's not the fact. The fact is today, an estimate is that today the globally debt accounts for almost 325% of GDP. It has increased. So back to Islamic finance. So risk transfer, risk sharing, equity financing, these are the value propositions of Islamic finance, and it would naturally be able to meet the needs of SMEs, the needs of entrepreneurs in new growth areas. So through VBI, we believe that Islamic banking institutions will again look at the situation of their customers, in this case SMEs, what will be the needs, and would offer the right financing products, for example, together with a complete, because when you look at value that you can create for your customers on a sustainable basis, so you will be offering a complete package of product and services, which would include, for example, advisory services, looking at the supply chain management, where supply chain financing is only part of it. So you may say that this is still a vision, but in reality is Islamic banks today in Malaysia are already offering some of these products. Supply chain financing, even trade financing products that will be able, that we believe, and these products are competitive compared to the conventional.
So how will that affect the profitability of the banks?
As I mentioned, is that the VBI is the way we look at it is a business strategy, and is about sustainability of your business operation, sustainability and growth of your customers, be it individuals or businesses. So, in essence, it will help to further support the bank's business and growing the bank's business moving forward. So, it will have to make business sense, and it will have to generate sufficient return to the financial institutions. I would like to emphasize that VBI is not CSR. All financial institutions, all corporates now, do CSR. But that CSR is based on allocated amount of fund being given separately. Here, what we're talking about is VBI as a business strategy of the institution to drive growth and to sustain growth.
And finally, what are the next steps for VBI?
What is the next step for VBI? We are excited about VBI. Why we are excited is that I think is not about the value proposition and the business aspect of VBI and the positive impact we believe it will make to our economy, that it will make to our community on a sustainable basis. We are also excited about VBI is because this is a collaborative effort by the central bank together with Islamic banking institutions. Today we have 9 Islamic banks which are already on board, what we call a community of practitioners. In fact, the document that we prepared and we put publicly available last month was a joint effort by both the central bank and these 9 banking institutions. We are working with these institutions in also developing what we call a value-based scorecard. This is the way to measure to what extent banking institutions have met their VBI objective. I would like to again emphasize that this is not a regulatory requirement. This VBI initiative is a collaborative effort between the institutions and the bank and the regulator. And when we talk about VBI, is that I think because how we get here in Islamic finance is that because we have set up comprehensive infrastructure, regulatory, supervision, legal. And one aspect of Islamic finance which is very important is Syariah-compliance. And we will not compromise on that. At the same time, through VBI, what we are emphasizing now is to move beyond just Sharia compliance towards achieving the intent of Sharia. When we look at in Islam in fact encourages us to do good and to prevent harm.